All right, traders, welcome to the SPACs attack, baby. I'm super excited. We got another executive interview. As you guys can see, trying to look fresh here for the interview. Got to look good for later on. Patti Cook, Finance of America. This is actually a company that I got into. I think like 3 or 4 weeks ago. So, guys, just gonna put that out, and let's bring on my man Chris Katje, the brains to the show. What's going on, man?
What's up, Mitch? How we doing today?
Hey, excited about the interview. Was watching last night. My man Kramer trying to hit on my SPACs, man, and guess what? I'll fight back. I'll fight back, guys. Kramer isn't gonna knock us down. One thing that he mentioned was celebrity SPACs, and this is what I can tell you guys, at least from my perspective. And Chris, you can add to this if you want. But one thing that I'd say, guys, is that definitely look at the board. I mean, we don't just decide off the first person on the board. We want to look at the whole kind of system and how they went about grabbing these different guys that they've been adding to their SPACs. So one of the ones that I'm in, guys, is Supernova, and I really like how the CEO of Zillow went at this. Raskoff really tried to like build the team in a kind of a business mindset. Like he went to certain private equity experts, then he went to certain people that have done this kind of business experts, like technology experts. And so that's what you need to look at. Do they have some experts to really lead their business strategy? What do you think about that, Chris?
So I've talked before. I think there's too many SPACs hitting the market, right? We may come to a saturation point. So I see a little bit what Kramer's talking about. So the celebrity part of that, I think you need to back up. So as you said, look at the board. So one of the very first SPACs we talked about on the show was the Shack SPAC, right? The Forest Road, which I own shares in. Did Shaq just go out and file for a SPAC, with his own money and just him on the board? No, he's got three former executives from Walt Disney Company, one of the biggest companies in the world. Is this a celebrity SPAC? I don't know. There's a celebrity on it, but as I said, look behind the scenes, see that those other people on board, and then one of the ones I was going to talk about, we have Alex Rodriguez filed for a SPAC last night, $500 million. Again, is A-Rod the only one on the show or on the board? No. And Alex Rodriguez was on Shark Tank. He's a valued investor. He's not just a former ball player and a celebrity. We talked about Dune acquisition with Steph Curry. Steph Curry's done investments alongside Chamath Palihapitiya. I mean, is he a celebrity? Is he just an athlete? No, these guys, these are serious investors. Shaq invested in Nest before Google acquired it. Like
Hey.
some of these celebrities, they know what they're doing, and I'd put my money behind them. I did with Forest Road, right? I'll invest alongside Shaq and three former Disney execs. So, as Kramer keeps talking about SPACs, he's very transparent, saying he doesn't understand them and he can't keep track of all of them. That's fine. Don't talk about them. We'll cover them here on the show. So, I value Kramer's opinion sometimes, but I think with SPACs, he might just be off base here. So that's what I've got to say about Kramer's take on celebrity SPAC.
Yeah, definitely. One of the things that I'd mentioned about that Shaq SPAC is that at the end of the day, just look at Papa John's. Look how the company rebound after they added him to the board. And one of the things that I heard Shaq, and Shaq mentioned this, is that he said this very well in his show. If you guys haven't seen his show, definitely check it out. But Shaq, what he said was that if I'm going to go into any investment, I need to be on the board. It's not a question, because he feels that if he's going to invest in a company, he needs to believe in the product and the people behind the product and the company. So that's really why he's going to this level, guys, and that's why he joined Papa John's, because they didn't only just bring him on, they put him on the board, and he made a lot of the decisions that changed the culture in Papa John's.
I like that little pun there that he helped Papa John's rebound. That was well done, Matt.
Hey, you like it right there. All right, all right. So let's go ahead and let's get into taking us to the headlines, Chris.
All right, guys, let's tear through some headlines here before we get to that exciting interview we have today. So up first, we have 3 SPAC ETFs that have hit the market. This is symbols SPCX, SPAK, and SPXZ. Those 3 SPAC ETFs have now seen inflows of $235 million. We had the CEO on of one of those. We're working on one of, so people definitely interested in investing SPACs, and if they can't keep track of all of them themselves, maybe they want to look at one of these ETFs for some diversification along the industry. We had a vote date set this week, so ROCH is voting on that merger with PureCycle. Vote date is set for March 16th. And then, as I mentioned, Alex Rodriguez, part of Slam Corp. So this is a $500 million SPAC that will be hitting the market soon. They are targeting the sports industry, but will not acquire a professional sports team. And then the other big SPAC announcement, KKR, one of the largest private equity companies, is launching a $1 billion SPAC. Again, this has not hit the public market yet. We'll get you more information when we have it. 2 SPACs to watch today. We've talked about this on the show several times. So GOEV and CIIC. That's Canoe and Arrival. So Apple and Hyundai appear closer to a deal to partner on electric vehicles. These are 2 SPACs that have investments from Hyundai, and Canoe was actually in talks with Apple last year for a possible buyout or partnership. So keep an eye on these ones, as they could be the way to play that Apple announcement. Another SPAC to watch is NSTBU. So this is still in units. This is a SPAC from Northern Star. So that company just announced that they're launching 2 additional SPACs. Now, the first SPAC from Northern Star was STIC. I own shares in. They are acquiring BarkBox, and that was one of the quickest SPAC deals done in the last year. So with those 2 new SPACs filed, we've talked about timing. This could mean that maybe NST target in mind, and we get a deal announcement soon. One of our big gainers yesterday was FMAC. This is First Mark. So rumors started up on Discord and across Twitter that that they were acquiring Discord. Shares went up 32%. These rumors didn't come from any major sources. So we talk about Bloomberg, we talk about Reuters, being really on top of these rumors. But unfortunately, this one just looks like it was some internet chatter. Shares are down today. I do own shares of FMAC, and I will note First Mark does own a equity stake in Discord, but that was disclosed several years ago. So keep an eye on FMAC. They do have the DraftKings CEO, Jason Robbins, among the investors. So I do like the team here. Another big mover yesterday was VGAC, up 31% on that 23andMe deal, which we talked about on the show. Shares are down today. Again, I pointed out in an article that went out that their revenue has declined over the last few years. And, it's not the high growth company it once was, but they do have a subscription model coming where they'll get annual fees from customers looking for, some extra data on that genetic research. And they also have a partnership with Klein for some upcoming trials. So keep an eye out on that one. HOL was also up yesterday, 12%, merging with space company Astra. That's one we've covered in detail. Then Clover, CLOV, of course, fell 12% yesterday on that Hindenburg Research short report. Company did not respond yesterday as they originally stated, instead issuing a response today. In that statement, they did say the Department of Justice has inquired. Investigation took place. They call out each point of that Hindenburg report separately. They did say the SEC is now looking into those allegations. A couple highlights. They talked about that company that one of their board members owns, and putting it in his wife's name. They also talked about turnover of employees due to needing the right people for growth. Shares are down today. Bank of America reiterated a $20 price target and a buy on shares. A couple more rumors we have. So DCRB, Bloomberg is reporting that deal done for Hyzon, which is a fuel cell truck startup working on some semis. They have an investment from Total. Definitely one worth watching here in the decarbonization area. That deal could be announced next week, according to Bloomberg. Another rumor is APSG. They're in talks to take software maker Solera public. So keep an eye out on that one. And then Archer, an electric aircraft company, is in talks to go public via a SPAC. No tickers were announced in that article. I will note that ZNTE is a SPAC that I own that is looking at that air mobility space and has a team that may fit well with me. So ZNTE did get a slight pop on that announcement. So that's what I've got for headlines today, Mitch.
All right, so yeah, I'm gonna take a look at that Archer one that you just mentioned and do a little bit more research. Like always, guys. I mean, at the end of the day, what I started doing is looking at the potential company and seeing how it's been doing trending the last couple of years. You know, one thing I look for is if like a company like is gonna get another one, like let's say Stripe is a target in a lot of these SPACs that has been mentioned. And the reason I look at Stripe is because, hey, if Stripe gets picked up, I've done my research into that company. That company has definitely, the growth on that company has definitely risen, and it has a great potential to rise. I mean, if you looked at PayPal and you look at Square to kind of give it a comparable, and you can see what that has done in the last year. So those are the ways that I attack when I hear about an acquisition and start looking at the company, seeing the growth, seeing the potential growth, and really that's where you go ahead and dig a little deeper. So speaking of growth, I mean, let's jump into our interview. I'm super excited about this interview. We've had her on before. If you missed the first interview, I'm gonna have to put it in the description below so you guys can see that one and compare it to this one. As you know, Chris has worked very hard to kind of get you guys some more information. What we try to do, guys, is always get you guys informed in SPACs, and this really what needs to happen in the SPAC industry is more information coming out so that you guys out there are the informed traders. So go ahead, Chris. Let's bring her on. Let's do this.
Yeah, we're so excited to have back with us today Patti Cook. So Patti is the CEO of Finance of America. That company is going public in a SPAC merger with Replay Acquisition. That is symbol PLA. Welcome to the show once again, Patti Cook.
Hi.
How we doing? How we doing? Yep, we'll get you centered out. No worries. If anything, I'll get myself on the screen. I'm not as pretty, you know. So.
Oh no. So, Chris, how are you?
I'm great. It's great to have you back on the show, Patti. So our viewership has grown, so we definitely wanted to get you back on the show so more people can become, familiar with your company as we look forward to, this merger getting completed. So want to dive right into questions here. And I realize some of these may be repeat from our last interview, but again, want to get that information out to new people. So sure. I guess the first question is, why a SPAC deal to take Finance of America public here?
So as I've said before, it was always our intention to go public. If you look at Finance America, we started with private equity capital in 2014, and we knew that in the long run, being public and having access to both the equity and the debt markets would allow us to continue to have the flexibility to grow the platform. So we were all set to go public. What was interesting for us is this particular SPAC. And what I mean by that, we thought that sponsors of the PAC, Edmund Safran, Chin Chu, Lance West, given their pedigree and their background and their reputation, we thought aligning ourselves with them in this particular SPAC would be accretive to Finance of America.
Perfect. So I want to touch a little bit the merger timeline. So I realize you probably can't give us an exact date, but how are things looking as far as completing this deal going forward?
Yeah, we're on the timeline that we've indicated before, which I'm going to say is the end of the first quarter, maybe early April. So we're on track.
Perfect. That's always such a positive to hear, with those timelines matching up from the original presentation.
Yep.
Another thing I want to touch on. So, as I read through the presentation, one of the things that really sticks out for me with Finance of America is a motto that the customer is first, last, and always. Why is this so important to Finance of America? And from a financial perspective, how does this lead to possible cross-selling different products and services to those customers?
Yeah, Chris, it's something we're really proud of. So customer first, last, and always has already demonstrated sort of the value of that philosophy. And it shows up in two things: our net promoter score, which is over 95%, as well as our recapture rate in the mortgage market. So in retail, when we do an original loan with a customer and they want to refi, they come back to us and refi 50% of the time. And that really is without us even initially soliciting, because we didn't own the servicing. So if you just capitalize on that observation, we believe the opportunity to extend that cross-sell to include our other products is going to provide dividends. Good example would be within our commercial business, we have a fix and flip product, and Finance of America Mortgage is already generating about 25% of the volume in that commercial space. So we're really excited about the opportunity to cross-sell.
Perfect. So I know we talked before, we have a new administration. So we have a new president with Joe Biden. But since the last time we talked, we also now have a Democrat-controlled Congress. How could this impact a company like Finance of America going forward?
So I think when I look at the administration overall, the single biggest impact that the administration broadly is going to have is the Fed's posture. So if you look at the industry overall and the Fed's continued sort of guidance that they're going to keep rates low and are continuing to support the market by buying treasuries and mortgages, that maintains the tailwind in mortgage. When you look at the overall sort of Democratic administration and where they lean, what are they likely to do? They're likely to lean into credit, and they're likely to lean into customer advocacy. Honestly, I don't think any of the changes they'll make are game changers, right? At the margin, it may be a good tailwind for mortgage, but it really doesn't change our outlook, nor do I think it's a real meaningful change in, let's say, the volumes that are expected for 2021.
Perfect. So, you mentioned what may they do. So there's been some talks of some, home buyer credits, also, another round of stimulus. Is any of that baked into financial projections? Or since you say possibly, on the low end of volume, does this really not change the overall financial outlook of the company?
Yeah, it's definitely not in our projections, and I'm not sure it changes our overall, let's say, budget planning for 21.
Perfect. So how has a company like Finance of America, shifted during the pandemic?
So the pandemic was really interesting because I think it speaks to the flexibility of the platform. So two things to talk about. We moved seamlessly to a work from home environment. We have 6,000 employees, 1,000 of which are in Manila. And if you look at the productivity statistics, we were actually more productive in 2021 than we were in 20. So from an operational perspective, we executed flawlessly from my perspective. In addition, if you look at the opportunity created in March, as a management team, we made some quick, facile, and effective decisions. A good example, and I think we talked about it before, is an asset within mortgage called mortgage servicing rights, or MSR, is a servicing strip. Prior to March, we sold it. It was trading at about a point. During March, lack of liquidity, and that mortgage servicing right was as cheap as 25 basis points. We immediately pivoted from selling to retaining that MSR. In addition, we were a little worried about our commercial business and the uncertainty around the economy. So we backed off lending there and actually suspended lending for a couple of months and pivoted some of our resources over to mortgage to make sure we were capitalizing on what we thought was going to be a tremendous opportunity. So I think if you look at COVID, we were flexible, we adapted quickly, and we executed well.
So to diversify over the years, Finance of America has made, some acquisitions. Can you talk about some of these acquisitions that have been made and how they kind of fit into the overall Finance of America business model?
Yeah, absolutely. So Finance of America was built purposely to generate cycle-resistant earnings. And we all know that if you're a mortgage only lender, you're going to live through the ups and downs of interest rates and mortgages. So when we looked to put the company together, we wanted to have a series of businesses that were complementary and uncorrelated. So mortgage, you've got rates. Reverse, you've got the aging baby boom population that needs a new product. And in commercial, you've got fix and flip and the aging inventory. So if you look at the companies we bought within lending, they were meant to build those out. And then we bought a series of businesses in InCenter, a title company, an appraisal company, all to generate fee for service. So the acquisitions were purposely built. And as you see us go forward, we will selectively and strategically continue down that path of adding complementary businesses that support growth and cycle resistant earnings.
Perfect. That was going to be my next question is, will we continue to see more acquisitions? So I guess I'll hit on my next one of, what are the new areas of growth for Finance of America, that maybe haven't launched yet, that could provide, some upside, into financials and for investors here?
Yeah, so we've got several things that are imminent, which what I mean by that is you'll see evidence of them in 2021. One are agricultural loans to tenant farmers. It's a $60 billion industry. It's an underserved population, and we are partnering with a lender there to increase penetration. I mean, we did something like only 50 million last year. We think we'll do 500 this year, but this could be a multi-billion-dollar business for us. And the opportunity is really a great one. In addition, we've talked about home improvement and point of sale. This is such a great add-on for Finance of America. Think about it. You're partnering with the provider of the service. So you're partnering with the construction company or the one doing the home improvement. They're able to go into a potential borrower and at the same time talk to them about how the borrower might finance the work. So for us, this is a great way for customer acquisition. It's a growing need, right? We talk about the aging housing stock. We know there's demand, and it's another really great way for us to add customers to the overall Finance of America platform.
Perfect. So I know Mitch has some questions from some competitors here, but before he gets into those, one of my questions, again, I look at that presentation and I see strong earnings growth, right? So, is there talks of a dividend in the future, and what will determine that for the company?
Yeah, great question. So we generate a fair amount of free cash flow. And I think initially we'll see whether or not that cash flow can be deployed at an attractive sort of return on equity to grow the business. And we would either do that organically or inorganically through acquisitions. If once we have looked at those opportunities, we still have a fair amount of cash flow, then I think we'll look at potentially improving the balance sheet, maybe look for an earnings upgrade on our debt. And then if that also, we're in a position where we're comfortable, then we'll look at maybe share buyback or a dividend policy.
All right, I want to jump in here and ask a question. So one of the things that I've been looking at, and I'm going to pull up the investor presentation here to kind of give a little background, is so one of the things that I noticed is, this consistent improvement over time, and the growth that you guys have had here from 2017, 2018, 2019, comparable to a company like Rocket here, and really the significant structures of those tailwinds between mortgage, reversal, and commercial. And one thing you can clearly see, guys, here is how it's kind of leaning towards and lowering down a little bit of that mortgage and being a little bit more diversified. How is that going to affect your company, and how is Finance of America different from someone like Rocket or United Mortgage, Wholesale Mortgage?
Yeah, so Mitch, this is a great chart. I love that chart because it shows the difference. I mean, Rocket is a great company. right? They've got great technology. They've got a great story. I believe they can grow their market share, but they are still highly correlated to what happens in the mortgage market. Whereas for us, because of the other businesses, we can maintain, I'm just going to say, a steadier level of growing earnings over time. And it's a combination of the lending companies being diversified, and it's a combination of the fee for service, which we get from in-center and portfolio management, that makes us different from the mortgage-only lenders.
Definitely. So one thing I noticed is how much does your company kind of pay attention to the competitors' earnings reports? Recently we just got an earnings report out from United Wholesale Mortgage, and so how can at least investors out there, how can we take these earnings report to kind of adjust that to show the overall growth in the markets and how Finance America can really gain this market share?
So, first of all, we are interested in the competitive environment. And as an aside, we subscribe to something called Stratmore, which gives us data about our mortgage competitors and everything from efficiency, gain on sale, et cetera. So having competitive information is helpful. But having said that, UWM or Rocket have a very different business model than we do. So I look at their earnings, we make a comparison, but it has, in a way, limited value. It's not going to change anything that we're doing. And I think one of the big differences between us and them is you're not going to hear me talk over and over again about the way we're going to grow is via growth and market share. We are strategic about looking at improving and growing each one of our businesses. In reverse, we're generally always number one or number two. So it's not really a market share target there. And in mortgage, we saw an opportunity to grow our TPO business. And we see that opportunity because we have a third-party managed fund that wants to invest in the MSR from that channel. We have already hired people and doubled our volume. So we came to the growth in TPO, not because we sat here and said, we want to grow our market share by 0.5%. We looked at a strategic opportunity to grow in that market because of some strong fundamentals. I can't
the old mute trick. No, but you could see that in the investor presentation, also the innovation from the MSR fund that you guys have. So definitely, I'm going to take a look at that. One thing that I've been kind of thinking about, and this was mentioned back in November, kind of more when Biden wasn't a president yet. So we don't know how he's going to approach this, but the tax credit that was mentioned, maybe a potential first-time buyer tax credit. The last time we saw this was, after the financial crisis. And so what do you think? Do you think this is possibly happen, and how could that have an effect on your company?
If you look at, so let's look at what's happening in mortgage originations. If you look at what's being forecast, clearly purchase volume has been and will continue to increase, whether you look at Fannie, Freddie, or the M.B.A. And that has a lot to do with the fundamentals of household formation and millennials. Like, you can look all the way back, like 33 years, and look at births in this country, and you can project that, yes, millennials are increasingly looking to buy a home. So I think any tax credit, anything the administration does, is just further fuel to that tailwind. Again, I don't think that's going to change the forecast for purchase volume by a huge number, but it just continues to support a trend that I think is solidly in place.
Hey, I can't blame you for talking about that trend. I myself am starting to get into the market for a home. I've been saving up for a couple of years now, and I think this, with the interest rates being in the environment that we're in right now, definitely. You couldn't ask for better interest rates, really. They haven't been.
Got interest rates. You get a tax credit. Come on, Mitch, you got to buy a house.
Hey. The wallet's getting ready, and I might have to pull it out, let's just say. So let's go ahead and bring on Chris. Chris, any other last question here?
I saw a couple of questions here in the chat. One was about, kind of the breakdown of revenue across the business segments. So can you kind of walk us through how the revenue split for Finance of America?
Yeah, there's actually a chart in the investor deck that shows that. And I think what you're going to see now is that revenue and EBITDA both have been dominated in 20 and likely will be again in 21 by mortgage. It's an outsized opportunity. It's almost like when you have this many lending businesses, they're like options, right? And when one option is really in the money, which mortgage is today, you're going to take advantage of it. But I think when you look at our earnings, focus on the growth in the other channels. So you can look at reverse, which is probably forecasted next year to be maybe 25% roughly of EBITDA. But as those businesses grow, they provide support, right, for what may ultimately be for us a modest decline in mortgages. Hard to tell. But I think that dynamic, here's another one.
So right now I'm showing the addressable markets here,
Yeah.
and you can see here from mortgage, you got 11 trillion addressable market. You got reverse mortgage, 7 trillion, commercial 3 trillion, and investing 41 trillion here. So definitely you can see the addressable market. It isn't no little one here. So just want to kind of show that.
Big, right? And the thing that's driving them all is different, which is what's so attractive to us. You know, you look at the reverse mortgage market, we think that market will grow absolutely and will be a beneficiary given our position. When you look at mortgage, it's different, right? It's not that overall market is going to grow, but somehow we will continue to grow because of our strategic initiatives. So I think over time, there's another chart in the deck that shows, you know, our forecast for earnings and where it's coming from. And I think you're going to continue to see it be diversified. And we're excited to tell that story over time, right? It's different. We haven't been at it long enough, but I think the credibility and the understanding will accrue to us as we demonstrate and do what we said we're going to do.
Yeah, definitely. We're definitely, showing on the investor deck, that early into the multi-year refi boom. So definitely going to pay attention towards that.
Watch it. It's amazing. I mean, you still got 80% of the mortgage market that is in the money for a refi. And the industry can't do it fast enough. You know, people will say, well, why hasn't everybody refied? And it's like, well, for one thing, the industry can't handle all the volume.
Yeah,
right?
I've heard that.
Right?
Definitely heard that same comment. So,
which is it's a great position to be in as a mortgage lender.
Yeah, definitely a great position for you to be in, and I think it's a good environment, definitely overall for all refis. I mean, at the end of the day, there's not many people that got that interest rate when they first got their mortgage rate. So, of course, it's definitely going to be an interest. Chris, got one more for us?
Yeah, I got one more question from the chat. And, one of the things that stands out in that presentation, again, is the years of experience. So, Patti, I know you've been in this industry, for I don't know how to say it at this point, but for a long time.
40 years. It's like decades. Yeah.
So lots of experience. So the question we got was, what excites you the most personally about being in this space?
I mean, it's amazing that I can say this after 40 years, but I love my job. And honestly, I don't think I could have I could be in a position with this company and all of the opportunity we have going forward. We have a great management team, right? We're going public. We have access to capital and debt, and we've already demonstrated an ability to make this platform work. So, for me, let's be honest, I'm at the tail end of my career, not the beginning, and I couldn't be more excited as a way to finish it off than this.
Perfect. So guys, again, big shout out to Patti Cook for joining us on the show once again to get you guys this information about this great company. So again, Finance of America going public in a SPAC merger with Replay Acquisition that is ticker RPLA. So thank you, Patti, for your time, and we look forward to following the progress of your company.
Awesome. Thanks a lot, guys. Have a great weekend.
Thank you,
Patti.
All right, guys. Hey, as you guys are well aware of, I got into this company about 3 or 4 weeks ago, and I added them into my investment portfolio really as a long-term approach because really I'm looking at this as a next housing boom could come from this kind of low interest rates, and as you've seen everyone want to do refis, commercials getting bigger. I definitely am keeping this one in my portfolio. I really think this is going to be a long-term hold, and to say that, just to let you guys know, is a big thing for me because as you guys know, I do a lot more of trading than long-term holds. So I've done my research, and I'm super excited that this one's in my portfolio already, and just wanted to let you guys know that. Hey, Chris, anything else to add that you want to add about Finance of America?
Yeah, I think my favorite part was probably hearing her talk at the end there about, why she loves her job and what she does. But my other favorite part is, talking about the competitors. And I know we had that down as questions, from both of us. And I know that the chat was asking that from the get-go, right? So how does the company differ from Rocket and United Wholesale? And I love the breakdown of, not just being a mortgage company, going out there, acquiring, businesses that can expand the total addressable market, not being a seasonal company, right? That's so important, especially as being a public company where, now everyone's going to see your revenue and your earnings each quarter. They're going to expand. They're going to keep acquiring and growing different businesses. That's why I love their business model and, them against their competitors. So, Mitch, I know you own shares. I don't, but I'm looking at it next week. Because again, guys, this one's trading right at net asset values. As Julian Klimachko would tell us on the show, heads I win, tails I win big. So this is definitely one that, keep on your radar, know your risk reward, but there's not very much risk here with that net asset value. So
Yeah, I'll definitely be keeping an eye on this one. The chart shows us at support right now, and that's what I kind of like. Whenever I can get in and have an attempted entry near support, that's always going to make me feel like I can be comfortable in my position. But like mentioned in the chat by Carl, I don't take many long-term positions, guys. And the real truth is with SPACs, I'm trying to do two forms. I'm trying to have some that I feel are long-term holds, that it can be real companies for the long term, that I have no real feeling inside of me that, hey, this is just going to be kind of more of a little small gimmicky play. No, I do my research into those. And then I also have my hype ones that I'm looking for the hype where I think, the board and the amount of money in the SPAC could really grab a good company and give it that hype boost. So that's the way I'm approaching it, guys. I want to have some hype ones, some long-term ones, and then some that I just feel like, are generational plays, like the space plays that Chris mentions. Because at the end of the day, I mean, space racing, like we heard on pre-market prep this morning from Jason Raznick and Mars. I want to go to Mars, so I don't know how Jason got there this morning, but hey, Jason's better let me know what kind of rocket he's riding on to Mars, because I'm joining the next trip.
Yeah, great insight there, Mitch. And yeah, I think it is a long-term hold here. So I couldn't have said it better myself.
Hey, we'll interrupt right now, guys. If you guys are getting value from these executive interviews and also from all the information that we bring in our headlines and breakdowns, definitely, hey, give us a like, guys. That's what we do here. We don't just do it just for Chris and I to get some information and add it to our portfolios. We do it so you guys can get some information and make informed trades. That's really what it's all about, right? All right, so let's get into maybe some ticker time, guys. We still got a little bit of time here. We got about 20 minutes. Before we get into ticker time, I know Chris has something for us. So you guys start putting those tickers in the chat. And Chris, what's up with this? What do you unlock for us today?
Yeah, so one of the things we've talked about a lot on the show, right, is sports betting. So sports betting SPAC, and what better time to talk about them than going into Super Bowl weekend? So one of the things I said on the show weeks ago was me being a Michigan resident, I downloaded 6 apps for sports betting. I tested them out, and I also got insight from Bank of America's analyst Sean Kelly on who maybe is winning here in Michigan, right? So that's important because Michigan's the 10th most populous state and one of the largest sports betting markets that's currently regulated. So this is a big test for these companies. So, one of the things I'll say is the DraftKings app. I had problems getting that thing to load, right? Which, could mean that they saw insane downloads and they just couldn't keep up with demand. And I will say that their app was extremely user friendly. So it's no surprise that they have, a strong market share. And the data from Bank of America backs that up. So tracking download data, it shows that DraftKings has a 40% market share in Michigan. FanDuel has 27%. And then Barstool Sports 14%, BetMGM 13%, and then the rest of the companies just kind of trailed off. So we have William Hill, PointsBet, TwinSpires, Bet Rivers. So Bet Rivers is a former SPAC, Rush Street Interactive, ticker RSI. I downloaded that app and I liked it. I enjoyed it. It had the sports betting and it also had the casino aspect to it. I'm looking for them to maybe gain some more share in the market, but really I think the big battle is going to be, DraftKings versus FanDuel for 2, and then BetMGM and Barstool for 3 and 4, and then the rest of the players. But good news to everyone, it's a huge market right here in Michigan. So in DraftKings, they're really looking to grow that share. They're in the most states, and they'll be running Super Bowl ads this weekend on a national scale for the first time. So they're really going out there to acquire new companies. And then apart from Michigan, to touch a little bit on some news. So Rush Street Interactive partnered with a company for online casinos in New Jersey. So again, they're really focusing on that iGaming in New Jersey. Remember that Bet Rivers is also the #1 sports betting brand in Illinois because they got that early start and lead there. So again, I want to look at that Illinois data and see how that shakes out. If they can keep, strong market share, even if they're not #1. And then we talked skills, SKLZ yesterday, right? Huge deal announced with the NFL. So the thing that I'll say here is the NFL owns a stake in them. So this really shouldn't have been that big of a surprise, as the NFL, will now enjoy the future success of the company. And so if we back up for a minute, look at how much shares NFL deal, guys, curtains here. Skills has financial backing, New York Mets, the Milwaukee Bucks, and the Sacramento Kings. So baseball, basketball teams also invested in Skills. I'm not saying that means we get a deal for sure, but look at how that NFL deal came about, right? The NFL and the Patriots owner, Robert Kraft, both invested in Skills and the success. What's to stop the NBA and MLB from partnering with Skills, due to those team relationships? So definitely something worth watching. And then another note on DraftKings, they did just sign a deal for Canada. So they're now the official partner of the NFL for Canada. Before, their deal only existed in the US. That's for daily fantasy services. So remember, DraftKings and FanDuel, the story years ago before sports betting was those daily fantasy games. And what did that allow those two companies to do? Get a huge lead in user growth. They have this huge database of people who love sports. They love wagering money on sports contests, right? With those daily fantasy matchups. And now they're able to cross promote to those users to bet on sports in the states that are legally allowed. Canada is working on legislation to do the same thing as the US, where they would allow provinces to make their own rules and regulate sports betting. DraftKings, this is a huge deal for them. Do not estimate this early lead that they'll take in Canada to gain users ahead of that launch. So that's what I've got, Mitch, on, sports betting and the Super Bowl. I know, you're a big fan of sports betting as well. So here in Michigan, lots of players, but, I think DraftKings, proved again that, heavy demand, and they can really stand out from the competition. What do you think?
Hey, well, one thing I definitely do is, you already know this, Chris. I do a little sports gambling on the side. Hey, I like to have fun on the weekends. Let's just say that. And at the end of the day, what I always look at it is it's always it's always money that I feel like I can lose. It's nothing really massive, but one of the things that you can focus on, and I've mentioned this about the sports betting industry, is promo use and how much is that promo use actually driving the kind of the user base, and how much revenue are they actually making because they're giving so much bonuses out. And so this is one thing that I would start paying attention to. You got to do a little deep dive to actually get this information. But if you really look deep, this is what I noticed, guys, is that there's companies like DraftKings and FanDuel and MGM bets that are kind of more on the focus of we'll outlast you. We're going to advertise. We'll give all the promotions needed. We'll push as much as we can to get the user base that we want in our platform. And then there's other companies like you see Bet Rivers, you see some other ones, some kind of the smaller players stepping in that are what they're trying to do is not necessarily worry so much about advertisement. And I think this is where I'm going to bring up a market leader right now, but not so much focus on that customer acquisition in advertisement, but focus more on how we can get the culture of our platform up. And really where that comes into play is one mentioned in the chat multiple times here. I got, what's the Barstool stock, Chris?
Yeah, so Barstool Sportsbook is owned by Penn. So Penn hit an all-time high today. I downloaded the Barstool app. The thing I'll note with them is they did not give as much money for promotional credits, right? So I got $10 free for signing up, $5 free for filling out my profile, while some of these other companies, were given $50 to $100 in free bets. So that could be a good thing and it could be a bad thing, right? Because it's good that they didn't do the spending on it, but it could be bad because maybe people didn't, make money and stick around on the platform. The thing that you talked about, Mitch, the culture, the thing that sets that Barstool app apart is when I go on there, I can click on, odds boost. And among the options, you can bet with Barstool, right? So you can bet with, Big Cat. You can bet with Portnoy. You can bet with Spit and Chicklets, which is a hockey podcast. So they do, their favorite hockey bets. You can bet now with Logan Paul and Nick Merckx, who they signed, partnerships with. So, if Nick Merckx thinks, the whatever team's going to win the Super Bowl, you can bet along with him and they boost your odds. So great culture and great integration in that app with their personalities. And it shouldn't come as a surprise that Penn is hitting all-time highs. That earnings report yesterday, the highlight, and I wrote an article on this, Barstool Sports. It was all over that earnings report, right? Barstool Sports rebrands at their physical casinos. Barstool Sportsbook, growth in Pennsylvania, entry in Michigan, hitting more markets before the end of the year. So again, Penn isn't a SPAC, guys, but they're going to be a market leader in online sports betting. So yeah, definitely worth looking there.
Yep. And so look at what you see, it could be two stories here. It's two different business strategies there. You could gain a lot of users by giving them free money by big promos. And this is what kind of, and I'll single out one. BetMGM does this a lot, guys. They do this whole promotion where they give you like $1 and you kind of can get $100 for that one bet. That's how it comes out of Colorado. I'm not so sure in Illinois, but definitely these are the kinds of things that you'll see. And what does that do? Of course, I mean, if I can make a bet and get $100, I mean, why am I not going to at least try MGM bets? But also, hey, you look at Penn and you see shows, you see, you see an actual culture, an actual where you can hang out with the guys that are behind the platform. And I think this is what you'll slowly see the other ones kind of adjust to, bringing some influencers, bringing some content into it. And that's why you've also seen a stock that we've mentioned, Pubco, make a move into sports betting. Keep that one on the radar.
Definitely on watch there, yep.
The biggest thing with them is not necessarily I'm so focused on their streaming numbers anymore. I'm more focused on how they're going to react and use their assets to get into sports gambling. All right, guys, so let's go ahead and let's get into the best time of the day, the ticker time. All right, guys. So go ahead and put those tickers in the chat. I'm going to scroll up and try to grab some ones that were already mentioned. But definitely one that we left out there, and I don't want to leave it out, is GNOG. We can't leave out the golden nugget, Chris. So definitely let's just take a look really quickly at where it's at on the chart. And while you guys go ahead and put some tickers in the chat here. All right, so definitely seeing some pullback on this one. You know, this is the weekly, and the reason I'm using the weekly is now that we've gotten through kind of just the the IPO stage or the SPAC stage. Now that we actually gotten through that and we gotten this down hit, let's see when we actually find some support. And so one of the numbers that stands out to me right now is this 17 area, because I can see this resistance from this first move in the 29th of June, and the high there was 17, dead on, just 17. And so let's see if it can come towards that number and really hold that number. As you guys can see from this big bar on November 30th, it had a huge down move in the day, and it went to a low of 1655, and it came right back up and closed at 2338. What does that show? Complete reversal from that area. So I want to see if we get into that area, will we get that same kind of reaction there? All right, guys, let's keep rolling through here. Let's get some stocks from the chat, especially if you're new. This is your chance. Let us know what stock you guys want to see. The show's all about you guys, and so if you got a ticker, put it in there. All right, guys, so seeing a couple mentions here. Scott Bradford, BTWN here. What's up with that one, Chris?
So BTWN, still those rumored talks with Tokopedia, a leading e-commerce company, you know, in Indonesia. Anyone who's listened to me before, you know, I'm big on Jumia. I own shares of Jumia, the African e-commerce company, and also recommend Ozon, which is the Russian company. This one, again, high premium with no deal announced. But guys, if they land Tokopedia, I'm definitely going to take a look at it. The deal announcement, maybe see how high this rises, and if we get the fall. I don't want to buy in right now at the premium, but I do like the prospects of Tokopedia. You know, Indonesia is a huge e-commerce market.
Yeah, guys. So of course you got that deal announcement spike, and well, just the actual announcement for Bridgetown that gave it that spike all the way up to 2380. No, the high there was 2584 to be correct there. So one of the things that I'm starting to see is that sideways period of time, right? And so now that you're starting to get these bigger green bars to show up, the biggest thing is going to be the volume, right? And so you got this downtrend of volume down here, and then right there we start getting that spike of volume. What does that show? That it's starting to get ready. It's setting up, guys. Whether it's going to come down to the support or come up to the resistance, it's definitely getting some volume piled in there. On the 2nd of February, we got 5.8 million shares traded. Let's look for some kind of volume to come right back to those levels. Maybe let's say 4 million shares traded like it was the next day. Those are the kind of volumes that I would be looking in this one to see when it could really get the drive. One thing I would mention in this one is if it does have potential to do an announcement, more than likely by the time the announcement comes out, it would already be up here in the 19s. So I would try to attack this one near support and maybe try to hang out in this one. That's how I would take my approach in this one. All right, let's go ahead and let's keep running through here. Let's see what else we got. I'm seeing mention of this one. I'm not really sure about this one. I see SPFR. Do you know about that one, Chris?
Yeah, so SPFR is another Barry Sternlicht SPAC. So Jaws Spitfire, he was the one who did JWS, which landed a deal with Cano Health in the Medicare field. You know, Barry Sternlicht, big name. You know, this is one I've definitely looked at. It's a newer one, and kind of that, you know, second one from him. But it is trading, you know, 1160 here, so a little bit of a premium, no rumors or anything. So just based on the name, you know, and JWS, that one when it was announced, you know, really didn't. It kind of pulled back, and then now it's starting to move back up. You know, so that one people were kind of undecided on. So definitely on watch here.
All right, so seeing another one mentioned here, and this was one that, you know, SPRQ here. So Spartan acquisition. One of the things I noticed is this one has done a nice pullback on the daily. So let's take a look at this. All right, so one of the things that you can notice here is where can we find support, guys? So prior resistance. So right here, I see this close, and I just draw it across. And guess what you get, guys? A first dip into it here, a second dip into it here. And so I would look for this one to hold. Maybe just keep going sideways near this line, and you're looking for some big volume to come back in it, because it could crack down, towards this gap, guys. It did a gap up from here to here. And so one of the things that you don't want to do is get caught if it tries to come down towards the support. So make sure that it's holding up there, but definitely you're seeing some kind of support there being held near that 1250 area. So I keep an eye out on this one. It really doesn't look bad with that kind of spike up, but the biggest thing is that it could come back all the way down towards the support of 11. And so you don't want to get caught all the time just trying to reach and reach. One of the ones that we've been watching, RMO, I think it started actually moving today. I'm not in this one, but been seeing kind of these small little spikes of volume. And what we need to do is we need to see breaks of resistance. A lot of the times I'm seeing these kind of now starting to build up volume, but then they go a little bit sideways. So you gotta, I'm starting to kind of wait till I see the resistance breakout so that I can try to attack a stock like RMO. All right, guys, I'm seeing in the chat, my man John Doe doesn't want to give it up. So I'll give him some love. ROCH here, ROCH. Let's take a look here. What do you think about the Roth life?
Yeah, so, just announced that merger vote date, that it's going to be March 16th. This company is acquiring PureCycle. It's a plastics recycler. So again, it doesn't sound very exciting, but they have a proprietary method, and they have investment and partnerships from, some large companies like Procter & Gamble, Total, BMW. Procter & Gamble actually created this technology, and now they license it out here to PureCycle. This is a long-term sustainability company, as we obviously have a problem with plastics and recycling in the US. This is a company, that could help solve that and could really get some interest from this new administration as an investment idea here.
All right, guys, seeing mentioned in the chat here, LOAC here. Let's go ahead and take a look at LOAC here. So that's longevity. One of the things I've been kind of playing around with, and Chris and I have mentioned, is these names, guys, and how they could possibly affect. I like the name of the actual acquisition corp. Maybe the ticker not the best. Low AC. Yeah. Doesn't really, I don't know about you guys, but I like my AC up, not the low AC. So what's up with this one, Chris?
Yeah, so this is a bio SPAC deal. So I don't dive into the bio ones as much because that's not my area of expertise. This one does have a very low float for shares, so I know it's been a popular one mentioned, where it kind of trades on those waves because, low float trade. So this one, I just don't have a ton of information, but, I was trying to find the new ticker, Mitch, because, you said you love those tickers, and the company they're merging with is 4D Pharma, which I think 4D Pharma actually trades in London, and that ticker is DDDD over on the London exchange. So, I think that might end up being the exchange here in the US too. So I guess 4D Pharma will be an easy one to find their ticker for.
Hey, sounds like you're trying to give a shout out to Triple D there. It doesn't sound too bad. I'm sure he'll enjoy that shout out too. So hey guys, one of the things that we're going to keep doing, guys, is bringing you guys the executives, the experts, and what you guys want to see on SPACs. I mean, if you guys have a topic that you guys want us to run through, put it in the comments below after. One thing that we're going to do also is that this show will be split out. So if you guys are, extreme SPACs attack fans, we are going to be putting out our show separate from the live stream. But of course, join us live as we go through this every single day so that you guys can be the first to the news and the SPAC information. And then, of course, hey, a little bit later, check us out, and you could keep us a little bit slower and find out a little bit more on the exacts that we're talking about here. So, Chris, anything else you want to leave off with?
No, that's it. Great show, guys, but stay tuned. Don't go anywhere. There's more coverage coming here on Benzinga, all day long. You're getting great ideas. I know I enjoyed yesterday, hearing some ETF ideas from Spencer, and listening to the, Zinger Nation Power Hour. So keep it locked here, and you may even see Mitch and I back on here talking some stocks and non-SPAC ideas later. So don't go anywhere. Smash that like. Let's get to 1,000 here.
All right, yeah, definitely, you guys. You guys smash that like button, and if you haven't gotten the SPAC newsletter and you're a SPAC fan, you're missing out. Look in the description, hit that link, and get that SPAC newsletter. We'll see you next time, guys, on the best SPAC show in the world, the SPACs. Attack, baby!